everybody, welcome to Market Masterclass. And on the world front, we looked at Panama, and we're going to stick in that region, but we're going to look at non-equities. We're going to look at a bond fund. We're looking at a group which has been around since 1971. The group is called PIMCO. They started in Newport Beach in California. They have 13 offices around the world. They got 2,200 employees. They are a massive investment company. They do funds for and investments for institutions, for financial advisor groups, and for individuals. This includes they invest money on behalf of corporations, central banks, universities, endowment schemes, foundations, public and private pension and retirement plans they're investing. They have a very substantial fund which has been around since 1987, and that's got $84 billion in it as of October 2016, with 8,431 holdings in it. And they look at high quality intermediate term bonds. That's government bonds, mortgage-backed securities, corporate and high yield bonds, and it includes doing some swaps and futures. They had a very successful, very highly revered fund manager called Bill Gross, who left in 2014. And as a result of him leaving, the fund, something like over $140 billion was withdrawn from the fund when he left the company. And this shows that individual fund management individuals are critical in a lot of this investment world that people are investing in. So this one has stabilized since then, but the total holdings are at the moment 84 billion, as I mentioned, and it's a bond fund, so it's not in equities, and you'd expect it to tick along, hopefully, at a much better rate than bank rates, which is easy to do in this day and age. And what we've got here is a fund that this year has returned 5.28%. Over 3 years, annual average returns have been 3.1%. Over 5 years, the average annual return has been 3.78%, and over the last 10 years, it's turned in 5.54% per annum on average. So well above bank rates, avoiding equities, and a very well-respected, one of the biggest funds in its field worldwide, and that's the PIMCO Total Return Fund. And worth looking at from between your bank deposits and your medium to high risk funds, a relatively low risk fund returning fairly constant returns, 3 or 4% higher than your deposits you're getting on banks. That's the PIMCO Total Return Fund. Hope you found that useful and interesting. Bye for now.